Welcome back to our brand new studio and another episode of Uncontested Investing. Happy to be joined by my co-host, Suzanne Andreessen. And today we're going to continue the conversation about financing and funding, specifically talking about commercial financing for residential investors. Suzanne, there's always that debate, commercial financing, traditional financing. There's a lot of options out there, but today we really want to talk about how great commercial financing can be and what it can do for a residential investor in the short term and the long term.
So I guess, we're working with a lot of the smaller investors and we're trying to help them expand their portfolio. Um, why don't we talk about really what first the differences between the two, and then help them decide which one works
Yeah.
for them.
I think the first place to start for commercial financing is it's a lot easier to get qualified. I think that's one thing that is really important to parlay to investors or impart on them. Yes, the terms might not be the same, but not everything in this business is always down to numbers. I think a lot of it can do with ease of access, repeatability, a process in place. Commercial financing offers a lot of that, opens a lot of doors to investors that may not be able to get qualified through a traditional route. They can have commercial financing step in and take them to the next level.
So there's probably one key word that I think is going to be most attractive to these guys, and you said ease. So what are the easy aspects for them to consider this?
Definitely one of those would be the ease to get qualified, right? You have less stringent restrictions on how investors can get into it, play the game, so to speak, right? You're talking about lower FICO score, maybe not as much experience. One of the big things is the debt that they're taking on. A lot of traditional funding options, they see an investor that maybe has two or three or four properties in their portfolio. They're taking on a lot of debt. That's where traditional lenders want to take a step back.
Gotcha.
Whereas commercial financing and commercial lenders, that's when they say, okay, this is somebody that's taking this serious. They're well on their way to building out their portfolio. There obviously is some financial metrics that a commercial lender and commercial financing institutions are going to take into consideration and say, hey, okay, if they check these boxes, they can afford this loan and we can keep moving forward with their portfolio and their career. Whereas the traditional route, they're going to take a step back and say, all right, you've reached your limit so far. Commercial financing is the world is your oyster, so to speak, for investors.
So what type of asset does this suit best? Is it a single asset, or do you want to look at something that's a little bit? Can you go a little more? A couple of assets, or four? What? How does it work best?
I think investors are really going to want to do their research on this topic. With commercial financing, the beauty is they usually have creative financing options for a variety of different products. I mean, you can find a commercial lender that will finance pretty much any project, right? It's really what's comfortable for the investor. Where are they in their career? But whether it's, mobile homes, single family residences, multifamilies between 5 units to 20 units, ground up construction, even you name it, there's a lot of options for commercial financing. And again, that's one of the things where traditional might be that safer, more traditional route that people are used to. And, it's a proven path to success for maybe one or two properties. But I think over the course of the past couple decades, the advantage that commercial financing has is people have made this a career. It's something that people want to go out and do and actively pursue. Traditional financing served its time and place a couple decades
Sure.
ago. Now the new wave is that commercial financing because it's such a fast-paced game that these investors are playing.
Well, I think it also, leads to the strength of, the it's harder and harder these days to find the asset that really fits your buy box. But and we see a huge strategy in build to rent. And you mentioned, this investor's got three assets in their portfolio already, and they just don't see one they want to acquire. But this gives them a chance now to build one that really does match the buy box specifically.
And I think one of the things that maybe commercial lenders have a leg up on traditional is I'm sure you can talk to this about REI Inc., the education, the pursuit of education that you have for the industry as a whole. I think commercial lenders can actually act as a partner for these investors, whereas traditional funding, it's more of here's the money, use it wisely. Commercial lenders, give them the money, but they have a long-term approach. Can you speak to that a little bit?
Well, absolutely. But and then one thing I want to back up a question before we go
Okay.
forward is that when you talk about long term, are there timing guidelines that they need to follow? Is this a can you buy, hold, and rent with this? Is it a fix and flip, or does commercial fit that whole spectrum of
Yes.
strategy?
Yes, and it definitely does, and I think it caters to a lot of different investors, which is another leg up, I think, on the traditional sense of funding. They're looking for that perfect case, probably, a very easy fix and flip or just a very standard 30-year long-term rental, whereas commercial financing, they've seen just about everything.
Sure.
Or, if it's a reputable institution that's been in for 10, 15, 20 years, they've seen just about everything. They're always creating new products to cater to investors. Maybe three, four, five investors come to a commercial financer with the same problem, and that commercial institution doesn't have a program that's capable of solving that problem. You can best believe that they're going back to the drawing board and saying, how can we fix this problem? How can we be better? How can we offer more solutions so we're not turning away business anymore? So that's one credit for commercial financing, I think.
And that's kind of really the goal we talk about, with REI Inc. Our goal is to help the investors be better.
Yeah.
We bring that audience and we're mirroring the investor demographics where, the top 3 or 4% are the REITs. And everyone else underneath that is the mom and pop investor. And so, while a lot of these folks will become mentors for the smaller investors, we want to help them develop their own portfolio, use partners like we have with RCN Capital on how to benefit from better understanding of what the funding strategies are in place and how they can morph their portfolio, not just for today, but what they have for tomorrow and what they'd like to retire on as well.
Yeah. And I think that's important for investors to hear, right? That there are people out there that want to help them, that want to educate them. REI Inc. is certainly leading the way. I know RCN Capital values education very much so. And, maybe the investor does have to push a little bit. Maybe they have to ask, but I guarantee that if they ask the right questions to the right people, they will get those answers. They will get that education. They'll be able to take their career to the next level because at the end of the day, commercial financing, anywhere you get funding from, right? Repeat business is the
Sure.
lifeblood of that organization. So if that commercial financing company is going about it the right way and they want to educate you, um, you'll be able to learn so much on the fly, not just through the deal process, but even when you're actively looking for deals, how to network, how to market. There's so many stones that can be unturned if you're asking the right questions to a commercial financing institution. And if they're not willing to help you,
You
maybe that's
asked the
not
wrong
the right.
partner.
Exactly. Exactly. You read my mind. We're already on
It's
that telepathic range here as co-host, but I think that's a beautiful way to put it, right? You've got to be able to not give up on it if that first instance doesn't go well. Be able to have a few different commercial funding options, see which one is best for you, and then take your business there.
Well, and learn what your strategy is. That it's the hardest thing is finding the asset to
Hmm.
acquire.
Yes.
But we talk about sending your owner occupied folks out to get pre qualified. Almost consider this as part of your pre qualification process, not in the funding strategy, but how you're going to build your portfolio and know what your options are because that may help you make that selection of the asset as well. Whatever you could have limitations on how much you want to put in a renovation budget
Yeah.
or how long can you hold it before you can get a tenant in there. There's a lot of pieces in this that will help make this a successful transaction because lack of education, when that fails, everybody loses in that.
Hmm.
No lender and funding partner wants to take that asset back.
Yes.
Nobody wins in that
Yep.
scenario.
Yep. And I think you kind of touched on it a little bit there, but there are so many different types of commercial funding now that it's very important to do your research because if one specializes in fix and flip funding, another might specialize in multifamily. If one specializes in multifamily, another one might specialize in ground up construction. So if you find yourself kind of hitting a wall with a certain commercial funding institution, you're like, they were so good with fix and flips. What happened? Why are all my ground up construction
Sure.
deals falling through? Well, there's going to be another company out there that may pick up that slack. And it's good to have those options, right? Because then as an investor, you're talking about not only growing your portfolio, but you're diversifying it as well. And that gets into the whole conversation of protecting against inflation. When the market conditions get a little more strict and stringent, it's hard to operate. When you have that flexibility and a lot of different options, that's when investors can still succeed even in the toughest of times.
And you can weather the storm. Whether you have an extended vacancy time frame that you weren't planning upon, or that, and we've certainly seen this coming out of COVID, is when the cost of products for renovation increase.
Mhm.
And so you're trying to figure out how to manage all of this, and and diversifying your portfolio is a key
Yeah.
piece to that.
I think the next topic worth discussing when it comes to commercial financing is who should be using it. We talked about this a little bit earlier, but the new versus experienced borrower, I think both of them can benefit from this, but it's just kind of the way they're going about it. And one of those things is that with commercial financing, they're usually going to put the money towards an LLC, right? They're not going to give it directly to the investor and put it in their name. So I think that's important for newer investors to understand, right? This isn't just for experienced investors that have a bunch of different options and know where they want to go. Newer investors should get with commercial funding as soon as possible because that's how you get on the pathway for this to become a career.
Well, and that takes it, a step back on the educational piece. If you don't have an LLC, you should start with that.
Yeah.
You get everything, that takes some time to even
Mhm.
formulate that. So find out what, the barriers are and remove the barriers by being prepared.
Yeah. And not every investor has to follow suit with this, but I remember a few months ago, we had a very prominent lawyer in New York City, Talia Bashani. She came on, and her recommendation was actually setting up an LLC for each
Every
individual
asset.
property. Yeah. Right. So that's just another layer of protection. It seems like it's a headache for investors at the time. You tell them, hey, if you're going to have 12 properties, you should have 12 LLCs. Well, it seems like a headache until something goes wrong at one of the properties, and then you're able to compartmentalize, separate that asset, cut your losses, right? And you still have a very healthy portfolio of the 11 other properties. Suzanne, I think this conversation is going great so far. I'm excited to keep talking about the commercial financing options that these residential investors have at their disposal. Let's take a quick break. We'll give a shout out to our sponsors, RCN Capital, REI Inc. We'll be right back with this week's episode of Uncontested Investing.
See you soon. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today. Welcome back to our series on commercial funding. We've talked about a lot of the benefits that we've shown for opportunities for the investor, but there's got to be some pitfalls out there. What do they look like?
Yeah, there are a few for sure. And I think they're worth mentioning just for the investor to give them a little bit of a heads up, right? So, one, it could be a new way of business for them. You're stepping into a new territory. There's going to be new jargon, new ways of doing things. It can be a little bit intimidating for investors, right? So, for those newer investors that have been traditionally investing, right, you're going to want to learn new things, get as educated as quick as possible, lean on a mentor if possible. If you know anybody else that's invested and gone the commercial funding route, that's definitely a big one. One of the other things we touched on this earlier, right? It's a lot easier to get approved. Commercial financing is that pathway to making this a career, expanding your portfolio. But the one thing is, just because you can get approved doesn't mean you should move at that pace, right? So it's
Sure.
important for investors to kind of set a proper timeline because if you look up and you get approved for 7 or 8 properties, well, now that means you have to make 7 or 8 payments. You have to manage those properties. You have to find tenants. You have to make fixes, repairs, do renovations. So it can accumulate pretty fast, and you can look up and say, oh, I did a great job building out this portfolio, but now you have a lot of work to do and you may not have the proper strategies or processes in place to get all of that work done. So
And
that
you need to add in some of those pieces, if you are buy, hold, and rent, is your property management sufficient?
yes.
Do you need to expand that? So there's a lot of other expenses and hidden hurdles that
Yes.
are out there that you need to be aware of.
I agree. And then the market conditions, right? For the traditional side, we have mentioned that's kind of like the safer point A to point B way to go. Whereas commercial financing, you can take it in any direction and kind of expand any way you want to. But the market does affect commercial financing a little bit more, right? So they might see a little bit higher of an interest rate. The monthly payments might be a little bit higher if you're working with commercial financing. It's all about the checks and balancing, weighing the pros and cons. So commercial finance, it can offer you more ways to get qualified, more properties in your portfolio. So maybe you can balance that out, right? If you have a higher interest rate on one property,
Sure.
maybe on a few others, you have a very low one, right? So it kind of works both ways with the market conditions, and commercial financing maybe has a leg up on traditional when times are good. But when times are bad, maybe it's a little bit harder to get approved or a little bit harder to see a way through to this deal being very successful, if that
Well,
makes sense.
and the commercial piece of this, and even complements some of our earlier discussions about Burr
Yeah.
and the process, rinse, repeat. This builds nicely into that,
Yep.
but you need to really understand what your niche is going to be and how you plan on expanding your portfolio and the timeline that you plan on doing it in. It all
Definitely.
plays into that, but it will average out to be beneficial across the
Yep.
platform.
Yep. And you bring up a good point with the burst strategy, right? Because not that is two deals in one. So as an investor, you're gaining experience, you're gaining more capital. And if you're growing a relationship with a commercial financing institution, that's one of the biggest things I think investors will start to pick up on, right? The more experience you have, the better credit history you have, the better terms you get, right? So it
Absolutely.
may take a little bit of time, but if you start in 2025 with a commercial financing institution, by 2028, if you have 10, 12, 15 properties, you're getting their best terms, you're getting their top tier service. I'm sure people in the building probably know you on a first name basis as an investor. So you want to plant those seeds with the right commercial financing institution and just reap the benefits over a long period of time.
And it's following the same, when you look at, a new college graduate, they've got their first credit card and they're building up their credit history. Now they've got a new car loan, and that it does. It's all going to affect what, your payment rates and everything that you and how you behave in this market will affect how your funding rates and how your strategy and what rates you have, the timelines that you get, and you'll build in more flexibility based upon your
Yeah.
performance.
Yep. And I think it's worth circling back, right? As a newer investor with a college grad experience, right? Somebody that's just starting out, you really want to make sure that you're looking at all your options. We are by no way saying that commercial financing is the only way to go about this. It's the clear cut best way to do it. But commercial financing is offered a lot of people an opportunity to be successful in this industry, but do your vetting, do your research, talk to the right people. Again, we mentioned mentors and people that have can kind of lead you down a path to success in this industry. Lean on them. Figure it out for yourself before you get entrenched in one way or one solution to do business in this industry. Figure it out. Maybe commercial financing isn't the best for you. I think we've done a pretty good job of selling it over the past 15 to 20 minutes here with this
Sure.
conversation. There's so many pros to it. With anything, you're going to have pros and cons, but know people personally. We've traveled on the road a lot. We've heard people speak in front of hundreds and thousands of people in a room. There's so many people that have benefited and become successful from the commercial financing route when it comes to residential investing.
And partnerships in this space are very important. You'll have your funding partners, you'll have your rehab partners, and use that. And we've talked about, several strategies in funding. This is our funding foundation, really, for every investor that's in the space. And we were purposeful in choosing this as a strategy to help educate this audience. And we want you to consider us and other, opportunities in the space as your partner. Always reach out to either one of us. Nate and I are happy to answer any of the questions.
Yep. And I think going off on that, don't let a business card go to waste. I'm sure I'm sure over time we've collected thousands between us. But you never know when that next connection is handing you their business card, whatever the case may be, whatever part of the industry they're in, you can always rely on somebody for help. So don't let a business card go to waste. Always be growing your connections, your network. You'll never know when you're going to need them when the time comes up. So I think that's a great place to leave it when it comes to commercial financing. What do you think, Suzanne? We cover
Absolutely.
everything?
Yeah, and don't be afraid to ask for help.
Yep.
Everyone, whether it's this opportunity here or people in the industry, people are happy to help.
Awesome. So for Suzanne Andreessen, I'm Nate Zielinski. Thank you so much for joining us on this week's episode of Uncontested Investing. We'll see you all in the next one.
Take care. See you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.